So we went from the daily S1 to the daily R1. Huh. Might be a good opportunity to take some profit. Vikrant caught 160 on the Euro Aussie. Johnny caught, what was it, 380 on what? Pound Aussie. That's the difference in relative strength, isn't it? Like I've been saying, you know, I buy pound dollar and I sell euro dollar. Oh, that's just the range. Oh, I see. Yeah. Oh. Cool. Oh, Demeter got 150 on the Aussie yen. Good job, guys. Very good. Well, I got 25 on this one. How pathetic. Am I special too? Hey, good morning, everybody. Let's get going up. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade not just foreign exchange, but also energies and metals, stock indices from all around the world. And also binary options, which I like to use for either scalping or for hedging my risky cash positions. Do these sessions every single day. It's just after 7:30 in the morning, 2 hours before the New York Open. Coolio. So today we'll do some technical analysis. Maybe we'll do some fundies. What do you stink? Smell like plan? Now let me remind you, trading is risky, not appropriate for everyone. However, your past performance, good or bad, is not indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So it looks like you guys have been having some good trading days. Yep, a lot of Aussie trading. We can talk about diet. What do you want to do? Which Aussie? Suppose maybe even Aussie dollar. You know what? Why don't I pull up Aussie dollar? Well, all right, good enough. Nah, let's go to Aussie dollar. What? I haven't had a problem all day. And the MT4 crashed again. There's something going on the MT4. God dang it. Hang on. There must be like some EA installed somewhere else or something. I just optimized my PC, which means there's a whole bunch of stuff in the background. So maybe it's leaning on something. All right, well, anyways, this is Aussie dollar. This will work just fine. All right, so what's going on? RBA announcement, as you know, and it came out yesterday. And they said, look, we're still bearish on the Aussie. The Reserve Bank of Australia still thinks there's room for it to depreciate. But their tone. And their tone is a lot less dovish, which I guess supposes the first steps in a change of policy. And the change of policy would be, less cutting of interest rates, stabilization, so on and so forth. But, we're not ready for that. But they did say, the trade data has improved. What they're talking about there is specific things like iron ore and coal and gold and wheat and beef. All these things are things that Australia exports. Diamonds, teenage sitcoms. And prices are less bad than they were, which will improve, month over month trade data. So things are, dare I say, improving. They're not really improving. They're just not getting any worse, which I suppose is the beginning, right? Also, you got to remember that people are eyeballing Aussie and Kiwi because there is still an interest rate differential that's positive for a carry trade. But also, we know, and I've explained this many times in the past, fundamentally speaking, that Europe has begun to actually try to save themselves, which is amazing since Europe is so slow at such things. But quantitative easing has started somewhere between today and 18 months from now. The ECB money will trickle down from commercial banks all the way down to the average Juan. So that means their economy should stabilize, like I said, somewhere between today, which is not likely, and 18 months, which would be certain. Somewhere along there, the European economy stabilizes, so that would stabilize the Chinese economy. As the European economy starts importing more from China. So you don't need to import a lot from China if you already have deflation because everything in Europe's cheap. It's not until, Chinese products become cheaper than European, right? So anyways, so eventually they'll start ordering stuff from China. China starts improving, China starts stabilizing, and then Chinese demand for natural resources increases. Therefore, Aussie dollar, Norwegian krona, Canadian dollar, Kiwi dollar, South African rand, Brazilian real. You might say the real, it's real. Start to improve. So, all right, Mr. or Miss Hedge Fund Manager, what's your alpha? Do you wait so that a year from now, commodity currencies are stronger, and then you start buying, or are you out on the street now, kissing hands and shaking babies, drumming up billions of dollars for your fund by pitching the idea that we're at a 6-year low in commodity prices and that they from here should stabilize. So there's no more down. There's only sideways and up. And time is on your side on the long run. So you could say oil prices will not be at 44 18 months from now. So let's pose this to the community here, okay? How many people believe that there's a 100% chance oil prices will be higher 18 months from now than today? 100% chance. There is no doubt in your mind. All right, so did you buy any oil futures? Sebastian says, no, I don't mean to 100. I mean 100% chance that 18 months from now, it will definitely, without a shadow of a doubt, be higher than 44. Yeah, not $100. No, well, it's your opinion, right? So you're only 80% certain. What would you tell the client? You're going to raise money. Give me your money because I think maybe there's a okay chance that perhaps I don't lose your money. It's absolutely impossible, is what they want to hear. There's kind of a pretty good chance, maybe. My analysis indicates, right? You need to be certain. So, look, I would say 100% chance. But, you know, that's me, right? I've looked at the facts and I make an opinion. So, but what about commodities in general? Do you think if you're looking at, let's say, an 18-month period, iron ore, 6-year low, coal, 6-year low, gold, 6-year low, oil, 6-year low, and multiple economies around the world doing quantitative easing? What does quantitative easing do? Quantitative easing stimulates activity in an economy and thereby produces inflation. It takes time, though, doesn't it? So, how much time? That's the question that you should be asking, right? No, let me see if I can get my drawing tool. Depends on the velocity, yes. Mike says, does this mean weaker dollar? Very good question. If you were reading a textbook, it might indicate that, right? But you remember, almost everything you read is going to be wrong. Right? If textbooks were right, your college professor would be a millionaire because they would actually know what they're talking about. No. They buy a text. They pay $1,000 for the professor lecture outline textbook, and they do that. What? Here's the thing. What's going on in the economy to generate the move in commodity prices? Stabilization in the global economy led by the United States of America, the greatest country on earth. And so there'll be inflation here as well, but we're at the point where it's normalizing, the economy is expanding, there's growth, corporations are profitable, they're investing, and we'll be in the part of a cycle in which the dollar will actually be strong. And commodity prices will be increasing. And you'll say, well, that's not supposed to happen. Well, you're right. That's what the textbook says. But it's one of these things. How many people have heard that when the Fed raises interest rates, the stock market falls? Like, oh, soon as the Fed starts to raise interest rates from 0 to 1%, it's all over, right? Puppycosh. That's absolutely not true. You watch me. Stock market's going to go up, interest rates are going to go up, and I'm going to make money doing it. And at the same time, commodity prices are likely to go up, and the dollar's going to be strong at the same time. But are cats going to live with dogs? No. So stick with me. So what was I going to say? Oh, I guess I was going to do the average wants, right? Here's a central bank. Columns, right? The nice columns. And it's a C bank, central bank, right? Guess we'll do euro. And then what does this do? It goes to what? A bond dealer. And they're a big skyscraper. That goes to the dealer. Deutsche Bank, let's say. Dealer. Not much space. Okay. That goes to the dealer. The dealer deposits the money in a bank. Right? And then that gets loaned out, and then it goes to this bank, right? And then it goes to this bank, and then it goes to this bank. Why does it go from bank to bank to bank? Well, fractional reserve system says 10% goes to the central bank, the rest gets loaned out to this person, right? Who then deposits in a bank. 10% goes to the ECB, and then this gets loaned out to this person who then, what? Wants to build a factory, right? So what do? They deposit the loan into their bank, and then they can go out and what? Cut checks to hire, to buy land, to buy material, to hire staff, and all of those require checks, and those all get deposited, right? They buy land, so they get the title. Money, a check gets deposited at some other bank. Then the owner goes out and buys a bunch of steel. That goes to the steel company. So now that guy that borrowed the money, right, gets steel, but a check gets deposited in the steel company's bank account. And then they hire a bunch of workers, and when they pay them, right, they get the work, then they pay their workers. What do the workers do with the paycheck? They buy wine, they buy cigarettes, and they buy diapers. That gets deposited at the store's bank, and then the store buys more supplies for their shelves, and that gets deposited in those banks, and it just goes from bank to 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 bank. So the question is, how many times does it have to go to bank to bank to bank to bank until finally it gets to the worker, that's building whatever this guy borrowed money for, and they're building some sort of factory, right? Well, how long does it take before the worker is depositing and spending that money? So the question here is, how long will this process take? And is it enough money to stabilize the entire economy and then eventually improve the global economy as well? Because the Eurozone is actually a larger economy when you add it up by people. There's more people in the Eurozone than the United States of America. So that if you can figure out reasonably well how long this will take, you might already be in the assets that are going to appreciate. Do you understand? So let's say you thought this was 18 months. Let's say 12 to 18 months. You don't really know. It's not a 5-minute chart, is it? So if it was 5 to 18 months, well, how many months has it been since quantitative easing? Demeter's like, yeah, right in front of it. I have been all over Asia. Right. So let's just say it's about 6 months. We're fine. I'll take the 6 months. So really now, what we're talking about is 6 to 12 months. We should start to see some sort of reasonable signs of this process having taken place. Right. The first green shoots. You guys remember talking about green shoots? The seeds have already been planted. So I'm trying to teach you fundamental analysis here. Actually, I'm trying to teach you how to become a billionaire. So give me $1,000, and I'll teach you how to be a billionaire. Give me $1,000. Give me $1,000. Seriously, give me right? Nice stretch. All right. So how do you make $1 billion? Go out and tell people that you've done your research and your analysis shows you that we will see green shoots out of Europe and in China in 6 months. And that you want to first start tiptoeing into commodities because they're already at a 6-year low, and that 6 months from now, they probably won't be lower, or most likely won't be lower, and probably will be stabilized. And 12 months from now, they will be higher. So give me your money, and I'll keep you rich, I guess would be the story, right? So I think this would be the thought process that an investment manager would be taking. And when they're sitting down with their quants and their strategists, this is what they're thinking about. This is what they're talking about. And I think retail traders very often have no clue on what's truly going on. So that's why I'm trying to put this together with you, because, the past, these low oil prices will probably not be here in the future. So what are you going to do? Now, bear in mind, we had this conversation before the stock market crashed in, 2006, 2007. And then we had this talk before the grand rally. Weeks and weeks and months, I talked about the subject that you cannot save your way into prosperity. I don't know if we had a relationship back then, but I begged people to buy the stock market. And in fact, I don't even have to look at a chart because I talked about it so much. It wasn't the bounce at the 50%, but it was the 382 of the bounce, which was buy the Dow Jones Industrial Average or buy the S&P 500, buy anything at 8,000 when the Dow was at 8,000. Because again, where we are now and where we were then is likely quite different from where we will be, and it'll always be that way, right? And I think we're getting closer and closer to this change, guys, where the world that we're in now will be quite different in 18 months. So if you're truly a trader, a wealth manager, a portfolio manager, your job now is to have a strategy for how will you manage the money over the next 18 months so that 18 months from now there's a lot more money. And I think doing what we're doing today will be the wrong strategy very soon. Well, to me, it's not it's not a question of oil at all. It's a question of macroeconomics and uh, when will things change? Okay. Yeah, Mike's like, how much QE? I don't know. That's too academic of a question. It's like, who cares? It's not even our problem. Who cares? I'm not a central banker. I just need to make tons and tons and tons of money, right, Mike? Let's some PhD worry about the consequences. Let's just get filthy, stinking rich. If they overshoot and produce too much inflation, oh well. You know the greatest hedge to that? Become filthy, stinking rich. In the House of Cards book that I'm just wrapping up here, one of the top guys, he was sent an email to, or had an email conversation with somebody else. And he was really worried. He's like, man, I've been at this firm for 27 years, and it's everything's crashing around us. We're probably in our last day or two, and it's all over, right? He's having this kind of thing, and he's like, he'll be fine, for example, but a lot of people are going to lose their life savings and so on. But he still needs to make sure that everyone's protected, shareholders get the maximum value, and one guy says to the other, he's like, yeah, so if you start out with $1.6 billion and lose $1 billion, it's devastating, but you're still all right. Right? Like, wow, you just lost $1 billion. Holy smokes. And you're like, yeah, I'm going to have to learn how to survive on my 600 million. So anyways, that's the greatest hedge ever. So let the academics debate about it or study it. Let the what would you say, like TV analysts, let them debate it, right? Let central bankers deal with it. Let the government screw it all up. Meanwhile, just take advantage of it. So all these things, do I think it's say again, who cares? We're in a situation where the dollar appreciates. Make lots of money. Will it work? I don't know. Get rich. Now, I'm simplifying and also I'm being quite facetious, but it's not your job, so don't worry about it. So let's say something happens, the U.S. Economy goes back into recession, live in a huge house in a beautiful neighborhood, and then dwell about it. And you'll say, wow, we've slipped back into recession. I wonder what that means. Thank goodness I sleep in a comfortable bed. Everyone else is hopeless, right? Most people around you don't even get it. So you're well ahead of the curve. But our job now is to say, we're here now, we're going there, so therefore I need to make 1, 2, and 3 moves. Because we're here, and boop, 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 we're moving here. Okay? Now, should you worry about why? Nah, don't. In the sense of, philosophical reasons. What does this all mean, right? What does it all mean, Basil? whatever, just if the financial system's going that way, participate and profit. Then get into your Tempur-Pedic bed and then have your nightmares about why. Think about the guy, right? Like the guy Bear Stearns said, look, it's horrible, it's horrific that you lost $1 billion. But as long as you got another 600 million in the bank, you'll be fine. Right? All right, so anyways, this is Kitty Cat. This was our plan from yesterday. It stalled out a little bit. What are you going to do? John says, who got the billion? You know what? In my opinion, and it's all, well, I guess it's not all speculative, but I sort of suspect that Goldman Sachs, once they realized the situation that Bear Stearns was in, at that time it wasn't that big of a deal. Bear Stearns shouldn't have gone down. There was no real problem at Bear Stearns. Really, seriously, there was no real problem. Never. Lehman Brothers was nuts, but Bear Stearns, really, it was a good company. It really was. They didn't have like subprime problems. That's not what their problem was. So anyways, hang on. I believe Goldman Sachs smelled blood in the water, and they took advantage of it and perpetuated it, probably. And then once that part was over and they were essentially dead in the water, JP Morgan came in and raped and pillaged them. Absolutely. Just by design too. Just you know, yeah, just took the wallet off the body, you know? Very interesting. So, who got the billion? You know, some went to JP Morgan, some went to... It's sort of like Goldman Sachs was the murderer and JP Morgan was the thief. Right, JP Morgan came in and stole the wallet out of the back pocket of the corpse. So, okay, guys, so here, the question here, this is the dollar versus the Canadian dollar. And if you're a buyer at support, that's the first level support that I see. Now you can extrapolate this out because this is a 4-hour chart. So is it 31.00? Is it 30.80? Is it 30.50? Well, okay. Well, then, you know, that's up to you to decide. Okay. Okay, that's your alpha. But what is it that you're going to do? Now, yesterday's conversation had to do, oops, killed the wrong one. Yesterday's conversation had to do with not buying now that it's rallied, basically, right? That at some point it's likely to retrace, and that you should look at the previous level, which I call a role reversal, as a potential zone for support. Now, clearly I would have liked it to have gone up a little more, but it's the patience is a virtue strategy, isn't it? Okay. So the $1 million questions here. Is price going to go lower than this? Yes or no, guys? James, I'm not talking about oil bouncing today. I'm talking about somewhere between today and 18 months from now. Okay. So, yeah. So now we are talking about today and tomorrow. So if you think the answer is no, then the question is, where will you buy it? Oh, Oren says it could. Well, it could. The world could end today because of an asteroid. It could happen. But what would you put your money on? You are right. James is right, and we talked about it yesterday. But there is a little room for it lower, so we'll just have to pay attention. But see, all right. Let's go back to the previous conversation for a second. I was talking about it more in an academic way. How would you put together a strategy to raise investor money, right, and start your own fund, which I think you like, right? Isn't that an I think you guys enjoy or appreciate that point of view, right? Like, not just, oh, look at this 5A cross, but like, how do you put this together in a business model, right? When you're successful, what do you do? What's the next step besides me telling you, oh, buy it, support? I mean, think about it. How many times over the last 10 years have I said buy it, support, or sell at resistance, right? Yeah, um, so what are the first steps fundamentally in the recovery of commodity prices globally? Well, wouldn't at least the very, 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 very first green shoot? It's not even a shoot yet. It's the sand is kind of quivering where the green shoot's going to pop out, right? The seed, right? The leaves are cracking open through the seeds. It's just the very first glimmer of something might be happening. Is the RBA says, meh, things are not as bad as they could be. Now, does that mean, is that awesome news? No. Does that mean, the RBA is going to raise interest rates? No. But hey, things are not as bad as they could be is the very beginning of the end, beginning of the end of the trend, I suppose, right? Things could be worse. And then what's the next thing? Less bad, and then okay, and then hey, actually getting better, and that's the so I think fundamentally, as far as the RBA is concerned, we've been sort of like this, and now maybe we're just kind of the first entry into stabilization, right? And then eventually we'll get sort of an opinion, right? So an improved opinion. So we might just be here in the process. We're still mostly down, fundamentally speaking, but maybe we're getting ready to start moving sideways. So what if we got sideways kind of news out of the RBA over the next 6 to 9 months? Then what would the following 6 to 9 months be? Here. Now, are the markets lagging or leading? Leading. So, I don't know. Is it today? Probably not. But sometime soon, one of these RBA meetings is going to be interesting, right? But has it begun? Is 72 on the Aussie the low, 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 low? Well, you know what? We've been at 72 for 72 and 73 for a very long time. So somebody's going to front run this. Now, when did I say that we should start considering cornering the market on Kiwi dollar? Or Kiwi yen, actually, right? Kiwi yen, sorry. Kiwi versus the yen. But I guess what I meant was the New Zealand dollar. Last week, no, it was last month. And I don't mean like last week, last month. I mean like a month ago. Okay. Does that look bullish to you? No. No. But 18 months from now, where is it going to be? And the million or billion dollar question is, when will you get in? So when the stock market had dropped 50%, my tone changed actually, and we started talking about, when do you buy back in the stock market? And my message was, you cannot save your way into prosperity. My message at the time was, what's the cliche? What does the dumb money do? The dumb money rides it out all the way down to the bottom and then exits. So when the stock market was down 50%, I was talking about, now is the time you need to start getting back in, not getting out. Right? Did you buy Citigroup at $1.50? Did you buy Delta Airlines at $5? AIG at $2.50? Right? I bought Bank of America at $5. So on and so forth, right? When did you buy? Well, it's funny though, like there's fear and then there's just ignorance too, though, isn't there, James? So that was my message back then. So it's kind of like this, like the Kiwi dollar has dropped for an entire year. Uh-huh. Yup. Where's it going to be 1 year from now? Nice academic question, right? Well, if QE in Europe improves, what will be the effect of that? And that money goes here. And then what happens to that economy? Well, that improves and then money goes here. Well, what happens to that economy? Money goes here. And all of a sudden, once the money goes around the world, everybody wins. Right? And so using this chart now to represent the stock market, because I just don't, I guess I could pull one up, but I'm just going from memory. Let's say that was the stock market. We had this drop and then another drop. It was horrific, right? Now, actually, I remember we were ready for the stock market. We waited. It took like 3 or 4 months, and there was a head and shoulders pattern, and boom, we dropped that. It was so good. The yens were ripper strong. We made pips hand over fist. I traded pound yen day after day after day after day. Probably 500 trades in a row. It was nothing but pound yen, man. It was just fantastic. Yeah, the world was collapsing around me. What could I do about that? Make a lot of money. That's all I could do. But so now, using this like sort of like the stock market, what happened is we rallied up to almost 1,000 on the Dow, and then it came back. Guess what? That's where the 8,000 was. That was the buy, not the bottom. The higher high, higher low, role reversal, and then where did it go from 8,000? Do you know where it was a day and a half later? 9,200. What? Yeah, that's a year worth of trading in one day. And so now we're at like a bajillion, right? We're way up here now. And there's still people like just getting back into their mutual funds. And what did they do? They sold down here, and now they're buying up here, right? So that's just classic dumb money. So again, I'm trying to get you to ask the right questions. You know, is this a fake cross? Well, whatever. We'll get to that. Where are we going to be in a year? Why? Pretty basic questions, right? But if you can answer that, then we say, well, how are we going to get there? And that's what we do every day. How are we going to get there? Euro should stay weak and they stop in quantitative easing. And when they print the money and distribute the money, more importantly, where's the money go? They call that money flow. It's also a question of balance of trade and balance of payments and all these different things. Where does the money go? Well, Kareem says the equity market, but see, we're global traders. What equity market? Which one? So on and so forth, right? But it's not just that, it's business. Business-wise, I mean, think about it. The equity market is pathetic. It's so unbelievably small compared to what we're used to. The world revolves around cash, right? Wealth. I shouldn't say wealth. Money, which is what we do. The asset class that we buy and sell every day is money. And then how do you hedge what instrument do you use to hedge your money risk? Either through an exchange rate risk or inflation risk. What is used? The bond market. So that's what a financial market is. There's a way to transfer money and a way to hedge risk. That's what a financial market is. And that's what we do. We have the cash market, which is Forex, and the bond market, which is used to store your value or to hedge your risk. So that's what I mean is, where's the money going to go? So when does a German decide to build a factory in Canada or Australia or New Zealand or Brazil or China? When does the money move? Because they feel comfortable enough in their own economy, they feel comfortable enough with their own currency, or they feel so uncomfortable with their depreciating currency that they'd rather transfer it or convert that depreciating currency into a hard asset. So maybe it's better to get your euros out of Europe and build a factory in China, because at least now you have a physical asset. You see what I mean? And wouldn't this be a time to get into China when prices are low? So it all depends on your point of view, right? Of what to do with your money. But people are going to do something with their money. And if you can track where it goes and be there first, right? It's all about ambushing, right? That's what I said. If we're down here now and you think it's going to be up here later, then you need to participate in the process of moving that, right? So I'm just trying to put everything into context. All right, so what will you have me do today? What do you want to do with this? Do you want to sell this? By the way, do you guys remember when I took the mic, I said the low of the day is S1 and we're touching R1? I wonder what's going to happen. How many people picked that up? Wonder what should happen. Probably should take some profit. Right? You heard that, right? Pretty interesting that R1 held, right? Let's take a look at that. Is it a coincidence? Or do traders use pivot points? See, if you say it out loud, if you hop up and down on one foot and say it out loud, market participants use pivot points. Market participants use pivot points. And you're hopping down, up and down on one foot in a circle with your tongue out. Local participants use pivot points. You might actually remember it. And therefore, it will change your behavior in the future, won't it? Because you can say, man, well, I don't know much, but I know participants use pivot points. And therefore, you grow confident in them, and your analysis grows strong. So what do you want to do with this? Are you a bear? Or do you think we're going to go over 111 today? This is the end. So someone's going to buy the 21, right? Do you know how I know? Because the 21 is there. If you don't believe they're going to buy there, delete your 21 EMA. See, that's where I get rid of like, oh, it could do this, it might do that. I don't think that way. If you don't believe it, if you don't believe your analysis or you don't believe the tools, then stop using them. So the 21 tells me this, that we do this and we do that. So why am I long on this trade? I mean, there's a million different ones, right? But why this particular one? That it's still open. Yeah. So we'll go into a 5-minute chart here. You notice the London Open? All right. So WWWD, what did Wayne do? Okay. So we had a low in Asia at the support pivot. Fine. Moved up to 950, 109.50. Hit the weekly pivot. Would you consider that a higher high? Okay. Is this something that I've taught you? Look for the roll reversal and potentially, things like midpoint psych levels, for example. Classic, right? And so that's the strategy. What's the tactic? Have it come down, and it should make a higher high, right? And based on pivot points and stuff, what we're looking at is a daily S1, which would predict daily R1, but also weekly M2 predicts weekly M4. So it's a DR1 WM4 potential. So that is the conservative target is, I know it's hard to see, right? But, here. And the aggressive target is here. Okay. Now, if you're scalping as a bear, if you don't sell here as a scalper, you're just not a bear. Now you say, well, Wayne, on the 15-minute chart, you said the 21 is going to hold. No, I said if you don't believe it, then get rid of your 21. It can do whatever it wants to do here. The DR1 could be the top of the day. How would I know? I wouldn't possibly know. But if you're a scalper, you don't really care, do you? So you either treat that as a change of direction or you don't trade at all. The scalper is looking at it this way. Okay? They see the change in direction. What? So what they see is it either falls here or it goes up. And whatever happens will dictate probably the near future. For the next few hours, one or the other is about to happen. Okay? So a scenario here is it like this. Okay? And it's either going to go up beyond 11, or I guess 10, right? 110, or at 8. And that crossroads is what a scalper would take advantage of. Could this be No, none of this is profit taking for NFP. This is just people. It's the market doing what it's doing. Well, no, the issue, Zeal, is not euro. There are two issues going on right now: U.S. dollar and commodities. The commodity currencies appreciated today off of a less bad RBA. That's why I talked about commodities yesterday. We're talking about them today. It's amazing how suddenly commodities are strong. We talked about them yesterday. What did we talk about specifically? A bottom in the CRB index and a strong rally in the Baltic Dry index. Well, you can't actually recognize profit taking. You have to have a feel, I suppose. So this has nothing to do with euro, is what I'm saying. Euro is euro is euro is euro. Yes, Spain had a better than expected employment number. Who cares? Nobody cares about that. People care about yield. So there you go, scalpers. How's it feel now? How many pips will a scalper try to pick up on this? Probably not much because it hasn't rolled over yet on the 15. You understand there's a difference between centripetal and centripetal? Right? I spend a great deal talking about that topic in my book, actually. Now, Demeter, how about this for an example? Price rallies up to the pivot profit zone. Okay? And then declines. Was it profit taking or was it short selling? Probably more profit taking and a little bit of short selling because of the anticipated profit taking. You know, to each his own. So, anyways, bulls are going to have it this way. Oops. Come on now. We're here. Oh, wait, it's backwards. Whoa, my heart, love. Okay. What did you notice about the decline earlier? What do you notice about our decline? Yeah, okay. Is that important to you? It'd only be important to a bull, right? See, again, if I make you feel like you're going in circles, there's only one way that that could happen. You don't know if you're a bull or a bear. And therefore you get caught. You're like, oh, what's Wayne trying to tell me? Is he trying to tell me to sell this? Is he trying to tell me to buy? I'm not trying to tell you to do any of it. I'm trying to tell you to pick a team. And you're like, what's the secret message he's trying to get across? I'm not trying to get a secret message across. I'm trying to get you to make a decision and trade in that direction. Right? If you were a bear, this is a great scalping opportunity for you. Probably the only one you're going to get for the next 3 hours. Right? Now, if you were a bull and we had a 382 Fibonacci retracement, and then we get almost like a, what if it 1 2 3's here? What if it's not quite a 1 2 3, but what if you get something like this? Come on, MT4. There we go. What do you think that means? A higher low off of a higher low. Okay. It also bounced at the 50% retracement between yesterday's high and low. So you got halfway through yesterday's trading range and a 382 from today's low to high range. It's not the worst buying opportunity I've seen, is it? If you're a bull. Okay. If you're a bull, your next trade, if that doesn't work, will be sort of in this zone. Probably the daily central pivot-ish area. You got a daily pivot, you got a 50% fib, you kind of have like a roll reversal. 618 is about the same. So maybe this is a buying opportunity down here. I'm already long. And on a macro level, what we would be looking at then in that scenario is like an up, a down, and an up. Okay? But with time of day, with the US stock market opening soon, and we've already made a retracement, I think we would like this to hold for the bulls, right? That's what the bulls would truly want. And where would a bear sell? Bear would sell here. If I was a bear, I would like it not to have to make a double top. I think I would not do it because I think if this red zone here fails, along with the one we already have, right, then I would assume we're going to go all the way to the psych level. So I'd probably look to sell it at 110. Okay? So I think it's very, very, very clear if you're a bull or a bear. And if it's not clear to you what's going on, you might not have made that decision. And I don't think there's a right decision here on this one. Okay? Okay. See, I don't even want it to double bottom if I was a bull. Okay. Was a bear threatened on this one yet? Right? I was pretty clear, if you're a bear, this is where you would sell. Oops. I'd like to keep some of this. Okay. Was a bear threatened ever? If you sold it, right? So I think that's part of the fun of being a trader, is anticipating what other people are going to do before they even have thought about doing it. I love that. See, I don't think there's another place you could sell over the course of the next few hours. Right? There isn't. You either do it or you don't do it. So I can anticipate a bear doing that. How cool is that? No, Lewis, a binary for scalping, but also a binary is great for hedging high-risk cash positions. So on youtube.com/c/tradersway, you can Google binary hedge, and I'm sure you'll get at least 2 videos on how to hedge a high-risk cash position. So actually, before I pull that up, well, actually, let me type it in. Binary, TradersWay.com. Let me log into my live account. Trade like a nightmare, profit like a daydream. All right, so we're in. All right, there it is, 97K. All right, zoop. Now what we're doing? Oh, cash position. That's right. Excuse me. Kiwi here. All right. We were looking at this maybe, right? Oh no, that's not even the right one. Hang on. Boom. We were talking about maybe, just maybe, you could try to tiptoe in and corner the market on the Kiwi dollar. It's an example. There are many other situations, right? Maybe the Aussie dollar is another one. Well, why don't we do Aussie just for fun? Just because it's more recent. Aussie yen. Let's do that. All right. On a longer term, we have a potential bottom identified. Well, sort of have this area potential bottom. And we have this area as a potential bottom. Cool. Is it certain we're going to be in a bullish trend now? No. Is it possible? Yes. Okay. We're at resistance now, however, don't you stink? Okay. So let's say you believe, though, in 1 year we will be much higher than we are now. Certainly here, right? So we need to go on a little journey, don't we? And the journey is a reasonable amount of time away. And you're not an investor, you're a trader. If you're an investor, you just buy and hold and pray, right? But a trader knows that this is likely to come down off the 21, and then it's going to go up to test the 55, and then it's going to go down and make a triple bottom, and then it's going going to head up, and then it's going to go down, and so on and so forth. That's what I would say. But if you were making more of an investment, what you could do is you buy the cash. Now keep in mind, when you buy the cash, you collect interest, right? You collect yield. This is what the world wants, is yield. But you don't want the exchange rate risk. But a binary option, right? Just an option. And options were designed to be a derivative that mitigates risk, all right? So let's say you buy the next dip, okay, on the Aussie, just because I'm just incapable of buying at resistance. I can't do it. I just don't know how. So what it'll happen now is it's going to come down at some point. I don't know. It might go all the way up another 200 pips and then come down. I don't. It doesn't matter to me. I don't care. So let's say I buy here at some point, and I intend to hold it for a year. Well, every time we're at resistance, right? Every time we're at resistance, I could trade a binary. Okay. Now, binaries are interesting because you can get this down to, like, in the next 5 minutes, what's the Aussie dollar going to do, right? And you can trade as little as $5. But you can also make longer term positions. That could be in for days, weeks, months. Okay? And what you can do is offset some of the risks. So I think it'll go up for a while, then I think it's going to go down for a while, and I decide to buy the retracement, because if it does go higher, I have my 1, 2, 3 scenario, right? Right? If it goes up into here, kicks off the 55, comes back down. So I'll buy in here off of this area to the left. Wonderful. So I buy it, but I'm still facing risk, right? Because it's still not necessarily a bullish market. So now I can offset my risk by selling the Aussie dollar derivative, binary option. Okay, and that gives me the option to make money on the way down. If it goes up, it just expires worthless, and I wouldn't exercise my option. So it's an insurance policy. And will it offset all my risk? No, but I could, let's say, reduce my risk by about 40%. Okay. And that's how a lot of market participants would use an option. So you're long the cash, short the derivative. Long the cash because you have unlimited upside and you're collecting yield payments. 7 days a week, you're earning interest on your leveraged money. That's a lot of interest. And you short the derivative because if you're wrong, you lose a finite amount of money. If you're wrong on the derivative, that is, that means you're right. If you're wrong in the derivative, you lose your premium. So whatever, let's say you're long, one standard lot on the Aussie yen, approximately $1,000, right? It's more than that, but approximately $1,000. You can fully hedge the sucker, right? You can fully hedge it, throw down $600 here, partially hedge it. so on and so forth. And if you're wrong, you lose that much. No big deal. But remember, you also made money here plus interest. Now, if your derivative is correct, you'll make money on the way down. But you'll be losing money in the cash. So you'll make a decent amount. So for example, let's go back, let's say 500 bucks. Okay, so you have 500 bucks. So you invest $1,000 long in the cash. How long do you plan on being long this Aussie yen? You think it's going to go up here at least, maybe more? A year. But you face some risk and some volatility possibly, right? So therefore, but that's $1,000. So what if you spent $500 to hedge it? Well, if you're wrong and it goes lower and you spent 50% to hedge it, how much money do you make if you're wrong in the cash? So you lose $1,000 in the cash market, but you made $880 or have $880, right? On that hedge. Cool. Nice little insurance policy. And let's say a year goes by and you're up 2,000 pips. Well, that's $20,000. Plus, you earned a lot of money in interest. Couple of $1,000 in interest payments. And you had the whole thing hedged. How much did you risk on your hedge? $500. But you have a floating profit of $22,000. And in the real world, you risked $1,500. You see what I mean? You had $1,000 in the cash market, $500 in the derivative as an insurance policy. Okay? You lost $1,000. Let's say your trade falls apart. You lost $1,000 in the cash. You invested $500 into an insurance policy that paid you $880. So in that case, you made $380. So I said about 40%, right? So now, how much did you lose? About $600. Because you lost $1,000 in the cash, but you made almost $400 in the derivative. So like I said, it's not a perfect hedge at that rate anyways. It's not a perfect hedge, but you did reduce your risk by 40%. Of course, it depends where you put your stop. I mean, that's risk management, right? But do you understand? But that's what a hedge fund would do, right? They say, look, I know my analysis is right, so I'm going to take the shot and I'm going to be in before anybody else because I'm smarter than everybody else. I'm God's gift to the world. That's what a hedge fund manager thinks. He says, but I ain't stupid, yo. I'm going to reduce my risk. I'm going to make $20,000, maybe $30,000 on this one investment. off my $1,000 investment. But I better hedge it anyways. So I'm going to spend a whopping $1,500. But if I don't make 25 grand on this, I'm going to be upset. I mean, it sounds like a pittance, right? And if I'm right, it's going to cost me 500 bucks. If I'm wrong, I'm going to lose 600. So it's about the same, isn't it? Cool. Whatever. So you might say to yourself, I want a better hedge. Okay, there it is. Right? Gotta get, all right. $500.68. $568. Okay, you can mess around with it and get the perfect hedge and have it expire whenever you want it to expire and all that kind of stuff, right? Yeah, which hedge do you want? Look, these are longer term, right? You got your normal ones, you got your scalping ones. So like typically when I'm scalping, I like to be in for a half an hour to 45 minutes on my scalps. Because if I don't make 25 pips on my scalp, I feel pathetic. It feels just crappy. So, for that to happen, I need to be in for about 45 minutes. So yeah, so you can go, so the typical binary options, they're listed like every 15 minutes they expire out to the end of the day. And then if you, true scalper, like you're only trying to pick up a pittance, then you could do it here. And TradersWay allows you to trade smaller sizes. So you can this is a 60-second binary, right? You can go up to like 5 minutes. Okay. Now the cool thing about a binary is you can be wrong 52 pips. News comes out, boom! You're negative 52 pips. Well, in the cash market, what happens? You have a heart attack. Right? You're like, holy crap, look at that candle, oh my God! I'm down 52 pips and it hasn't even been 5 minutes. Holy crap. Does a binary guy say that? He's probably not even watching. He's like, he's probably getting a drink, walking the dog, doesn't matter. He doesn't care. It's all, like I was saying before, I'm not sure if I finished my sentence. When you're in the cash market, you have unlimited upside plus interest. You collect interest payments. In a binary, you have a limited downside. You can only lose what you risk. In this case, $5. If you lose 122 pips, you lose $5. If you lose 2 pips, you lose $5. Okay? It's all predefined. So you only win or you lose. There's no quality to it. You don't have a big win, but you don't have a big loss either. Ever. It's impossible. It's all like built-in stop management, right? And when you add it up, it's like a 1-to-1 risk-reward ratio, because a lot of people say, for example, let's say a 25-25 OCO, people will say, well, that's a 1-to-1 risk-reward ratio, but you have to account for spread, don't you? Well, that's basically what you see here, like $5. If you're right, you're going to collect $8.60. It's a $72 payout. You're like, Wayne, that's less than 1-to-1. Yeah, but that's the spread. You understand? Like if you added the 3 pips, it would come out to be $10 or whatever. So it's obviously the spread is less than 3 pips, right? So for true 1-to-1, it would be invest 5 to make 10. So Wayne, you're like, it's $1.40 less than that. Yeah, well, that's the spread. It's about the same as the cash market, guys. But the predefined win and loss. So here's the cool thing, like when I'm doing like like I said, when I scalp, I like to do 25 OCOs, right? Here's the cool thing about scalping with a binary. Okay, I throw down the $25. Oops. Okay. The spread is about the same that I would pick up on a cash. And when you're scalping, do you always get out at the exact top and exact bottom? No. You're usually you're going to be in a little bit late, you're going to get out a little bit late or a little bit early and all kind of stuff. So you might be up 20, let's say 23 pips. And you sit there and it doesn't hit 25. What do? Do you get out at 23? What do most people do most of the time? They're 2 pips away. What do? They stare at it until it comes 10 pips back. Right? And they get kicked out at 15 instead of 23 or 25, right? Or watch it go all the way back and get knocked out of break-even. Will anyone confirm that that's a reasonable scenario? You're almost hit your stop, but you watch it come back at least 50%, sometimes more, right? Well, what if it does that on a binary, comes back and you're up 23, you didn't hit your 25, then it comes back and the binary closes at like a 12 pip profit. What happens in binary? I get paid the full 25 pips. Oh, snap. Right? What? Booyah. It's all built in. The cash guy only got 12 pips on his trade. He made the same trade at exactly the same second, took the same risk-reward ratio as me. He almost hit the 25 pip limit, but not quite. And he watched it come back all the way down, and finally at 12 pips, he takes his profit. Me, my profit is hit at the same time. We have the same trade, except I get paid the full 25 pips. Boom! That's why it's pretty cool to trade with binaries. Because you're either right or you're wrong. There's no subjective, there's no quality assessment. Like, well, maybe it's only worth 12 pips. No. Boom. So you never leave a pip on the table. Now, sometimes obviously it takes off and goes even farther than 25 pips. Yeah, but I guess you should have risked more money. Whatever. That's the downside, is when you're really, really right, well, there's no quality assessment again. You're not going to get paid more money. Maybe you should have taken the cash position. But so far, I bet you anything, if you look at your trading stats, you're probably not really, really, really right a lot. Right? So you're like, what if you're mediocre a lot? Like you get direction pretty good. You're usually right on direction. You're really good at support and resistance. But risk management's an issue. Maybe binaries are a good place for you to practice. Right? So for example, let's say you're really good at resistance. And let's try to zoom in here or something. Okay. Let's say you're really good at resistance, and you say to yourself, over the next, certain amount of time, I don't know, hour, it's not going to go any higher because we're at solid resistance. Well, if you're pretty good at that, and I don't know if we have an example, go to Euro USD maybe. If you're really good, oh man, MetaTrader bombed out. So anyways, let me finish my thought and then we'll go. My thought process here is, here, let me boot this, even though it's only the last seconds. If you're really good at support and resistance, and maybe you overlap it with something like of day, with a binary, you only have to be right 1 pip. So it seems to me, if you were pretty good at identifying support and resistance, okay, so like this. Okay, we're at 74. Is it going to be higher than 74 2 hours from now? You tell me. Is New York going to take it higher or lower? Which way is New York going? Lower, 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 low. You sure? If I put 250 bucks down, are you going to feel guilty if I lose money? So at 11 o'clock, right before the London close, right, 2 hours from now, right before the London close, is it going to be lower or higher than 73.95? Oh, come on, guys, throw down a vote. Serious stuff now. So let me show you something cool. What is this, Aussie dollar? So we got it. I can actually add Aussie dollar binary option chart. Okay. There it is. Looks exactly the same, right? Okay, watch this. 250 bucks. I'm going to buy a put, which means it's going to go down. Just want to double check the time at 1500. Okay. There's my trade. You see it on my MT4? Sell 250 bucks. You better be right. There it is on my MT4. Cool, huh? See, Aussie dollar binary option. Sell. Cool. Well, thank you. I appreciate your analysis. You better be right. Yeah, sure, Gordon. Anything for you, buddy. how many people like Gordon sort of feel like this is a potentially a missing piece, or at least an interesting aspect to currency trading? Yeah, it's neat, isn't it? So maybe another. See, here's the goal of these sessions. I help you gain confidence and develop skills as a foreign exchange trader. And when you are ready, you will choose TradersWay as your prime broker. And you will build your trading business and career around their platform and services. So like, for example, you can trade the cash and the derivative market through your MT4, which is really cool, isn't it? And you could say, you know what, I really like that. I appreciate what TradersWay is doing. What they're doing for me, and the the tools that they offer me so that I can make money or lower my risk. You see what I mean? You say, that's it. That's what I want. Wayne's helping me. I feel really good about where we're going. I like what the tools we use every day. That's my home. I'm going to partner up. TradersWay.com. Well, the problem with using my templates is that some of my EAs I've paid for. They've been custom programmed. Others I've purchased from other people, and some of them, I think a few have been given to me. So like, I've downloaded some, I've been given some, I've bought some, I've had some made. It's a bit of a hodgepodge. But perhaps some of the things that I use you like, and you can certainly do some research and find those tools or similar tools on the internet, most of which are probably free. Now, the interesting thing about MT4 is it's highly customizable, and that's why it became the #1 trading platform for Forex traders, and even for other markets, I'm sure, because it is so highly customizable. I always say it's like a 50s hot rod, right? There's no two alike. So that's the only problem, right? It's not something I can just give you, but it's something you can certainly make, and you can probably improve this. I'm always monkeying around with stuff. So anyways, guys, this has been a very long webinar again. I think yesterday we went for 2.5 hours, but the video didn't work, so that's why. So now today, shoot, we almost went for 2 hours. So, well, a couple of things. One, I'm sorry I went long, and two, I thank you for your loyalty for staying for so long. I appreciate you. I appreciate that we work together every single day, and I thank you for the efforts that you put in to your trading career. I know you're trying hard. There will be a video for today, though. So could you do me a favor, either on forex.today or on YouTube? Would you leave a comment? Yeah, you can do that on YouTube. Is probably the easiest if you use YouTube. I think also every once in a while it'll say, hey, there's a new video if you want to go there. So I'm going to dump you on forex.today, our host, but click on any of those videos and it'll it'll take you to youtube.com/c/tradersway. So peace on earth. May the pips be with you. May your profits be above average. And I'm already looking forward to seeing you tomorrow. Cheers. Yes, I am doing NFP on Friday. You bet. I think it's month 110 in a row. Huh. That's a trend up.